Assist to sell way smarter.
Welcome to this live Reno Sparks real estate market update for November 2020. Now, our market stats are going to be for the Reno Sparks greater metro area, not outlying areas. So this is going to go as far south as, say, Washoe Valley, Pleasant Valley, of course, South Meadows, Galena, that whole area, Virginia City foothills, all the way north to the North Valleys, including Spanish Springs, Palomino Valley, Stead, Golden Valley, Lemon Valley, and all the way out to Cold Springs, and of course all the way out to all the way out to Verdi and Mogul out to the west, and of course East Sparks, Sparks Foothills off to the east. Now this is for single family residential properties only. We're not going to include condos, but the same trends we're going to speak about will apply towards the condominium market as well. So before I get started, though, I want to tell you this is a general like 10,000 foot overview, if you will, meaning we're just going to give you broad numbers and the overall sort of standing and health of the marketplace. If you would like a more specific valuation, more precise of your property, maybe you're thinking about selling and buying a new home, or maybe you're downsizing or thinking about refining or whatever it might be. If you'd like to know exactly what your home would sell for in today's marketplace, don't hesitate to reach out to us. We're happy to do it, to give you a full analysis, free of charge, doesn't cost a thing. You can DM us right below. You can shoot us an email. I'll put up the information here. You can see 688-6060 is the phone number if you want to give us a call. info@4renohomes.com. And of course, you can visit our website here at 4renohomes.com, and you can click on Find Out Now as far as a free valuation of your property. We'll pull all the stats. Every neighborhood, every size home price range is going to be a little different in the marketplace. So again, we can give you a good valuation. So let's dive right into some of these numbers. The first thing I always look at when it comes to the overall health of a market, or what drives the market, and that is interest rates. I always like to see the mortgage interest rates and what they're doing. And as you can see, and probably you've read or seen, mortgage interest rates are at historic lows, well below 3%. And 2 3/4, 2.5%, 3%, and so on. And you can see, actually, early part of the year in 2020, when the pandemic hit, interest rates dropped. Now, the good news is real estate has been one of the cornerstones, if you were, the bright spots of the economy in 2020. It's been a crazy year. It's obvious with the pandemic and all the fires that we had throughout the summer. And then, of course, we had a contentious election, which is still going on. So there's a lot of factors this year that have, put some negatives into the overall economy. But again, real estate has been a cornerstone. Real estate is really big as far as GDP and driving an economy. It's really one of the strengths of any economy, really. And if you think about it, it makes sense, because real estate is so intertwined with so many different industries, from construction to materials like lumber and concrete and things like that, to home improvement stores and workers, and the list goes on to the professional business end of it, with real estate agents and companies like ours, to mortgage people, to title and insurance, and it goes all the way up the spectrum. And that's true for commercial real estate, multifamily, residential, and so on. So I believe going forward, people ask me all the time, where are interest rates going to go? Or they have to go back up at some point? I think they're going to remain relatively low for the next at least 6 months to a year. I think the Fed is going to do anything they can to try and keep interest rates low, to make sure there's strength in the overall housing market. So you might see them tick up a little bit here and there, but for the most part, I expect them to be right around that 3.5 range for the foreseeable future. So let's talk about median sales price. Now, as you get lower interest rates, people can afford more house. Therefore, that tends to drive prices higher, and that's exactly what's happened. If you look here, last month was $440,000. We're up 3.4% to $455,000 as a median sales price. It's up a whopping 13.8% from this period last year, so nearly 14%. It was right at 400 last year. So as you can see, it's gone up significantly. And again, if you look at back here in 2018, where things leveled out and actually started to pull back a bit, you do see that from time to time. But if I compare interest rates here, look what happened back in 2018, right? Interest rates popped, they came down, and then they really went up to like 4.8, one of their highest levels they'd been in, I think, 6 or 8 years at that point. So that puts a downward pressure on prices. And of course, as you see interest rates drop, prices, of course, tend to rise. Now, the big story of this market, if you've watched any of our market updates over the last few months, you know it is inventory. And this is actually new listings. So these are new listings that came on the market regardless of the status. So some of these might already be sold. Doesn't matter what the circumstance are. These are just homes that were listed in October of 2020. 568 total homes, and that's down 8.5% from the same period last year. That's down from last month at 8.5%, down from 621, but up 11.4% over the same period last year. And if you look at this, you'll see what happens in our market, and this is true for most markets around the country. They may fluctuate a little bit, but usually in early January is when you start to see listings tick up, and you can see they usually top out right around April or May. Sales usually follow right behind about 30 to 45 days. So that's why we usually see listings start to peak out somewhere around, like I said, April, May, June. We see sales usually peak out around May, June, July, and then you start to see them tail off, and you can see it's just almost like a heartbeat of the real estate marketplace. Now, of course, again, obviously 2020 has been a whole lot different. Instead of the spike up here, you'll notice we don't see any of the spike up here that we'd normally expect. We were headed that trajectory, but unfortunately, obviously the pandemic hit, and this happens to be in March, April, May. This is when it slowed down, and then we got some listings. But if you think about it, this makes sense. A lot of people were concerned about jobs, the overall economy. People were on lockdown. I don't know if I want to sell my house. So I think a lot of people held off that really wanted to sell but didn't really have to. They kind of held off and said, look, I'll wait to see how this whole thing plays out. And you're seeing that reflected here in the overall inventory numbers of the new listings that have come onto the market. Now, you'd expect it to drop this time of year anyways, but we didn't get that overall spike, if you will, of new listings that were supposed to come on the market really April, May into June. It tried to kind of rebound in terms of listings, but has since softened up. Now, this is active inventory. So this is inventory that are available for sale at the end of the month. This is based on the contract date. So if you look again, you'll notice January peaks out somewhere in July, pulls back. Again, peaks out. This is 2016. April peaks out, pulls back, and so on. Now, there are obviously some anomalies in here, but for the most part, you see this up and down motion here. And we got it. Again, it was trying to come back, the number of active inventory. So active inventory was trying to make its way up, and it should have probably ended up somewhere up here. But instead, we saw inventory fall off. Again, if you look at new listings here, you can see that's reflected here with the active inventory and just fell off. Now, we're down a whopping 26% from even last month, and we're down 68% from a year ago. So these are actually listings that are available for people to purchase. So significant drop in inventory, which is causing the upward pressure on prices. When there's less for people to buy, interest rates are low, people want to buy it, but there's nothing to buy. It makes the houses that are on the market more valuable. Now we look at active by price range, and I wanted to pull this up because this is very interesting. You're starting to see, obviously, the 394. So this is just this chart right here, broken down into price ranges. And you can see this is up to 300,000. This is up to 400, 500, 6, up to 750, up to $1 million, up to 1.4 million, 1.5 million and above. Now you can see inventory is extremely low, under 500,000, and really under 400,000. You've got about maybe 60, a little over 60 homes out of the 394. So very limited inventory on the lower to mid-range prices. You got a little bit more up to 500, and then as you go up, you got most of your inventory is up here in the really 550 and up price range. Now let's talk about absorption rate. All this means is how many months it will take to sell through active inventory on the market if you kept at the monthly sales pace number. So what you'd normally see in a regular or stabilized market is right around 3 to 4 months, maybe 5 at the most. You usually have enough sales or enough inventory on the market so that sales per month you would have to take about 2 to 3 months, maybe 4, to sell through all the active inventory. Right now, we're seeing that at less than 1.6. And again, look at those numbers. It's down 17.3% from last month, and a whopping 70, almost 71%, which was 2.2 last year. So homes are getting absorbed rather quickly. We have more sales taking place than we have homes to come in and replace them, right? You need inventory, and then those homes sell, and you usually have new inventory to replace it. We're getting the sales, but we're not getting the new inventory behind to replace it. Now, what's interesting, if you look at the absorption by price range, and if you were to actually back out these upper end price ranges, you can see these upper end price ranges like 2.3, they're more normalized up at the 750 to a million, 1 million to 1.5, and so on. Still low at the 6 to 750 range, but extremely low. You're looking at 0.3 down in the 3, 4 up to 500 range. So everything is selling like crazy down at this low end here. So what does this mean for the overall market going forward? Well, unfortunately, it's almost impossible to predict, but I can tell you this. Obviously, I believe we are going to see significant activity at the first part of next year for a variety of reasons. I do think that with the election behind us over the next couple of months, we'll have some sort of resolution there. I do believe pandemic obviously is spiking in many areas of the country, including ours, but I do believe you've heard really promising news about a vaccine and a lot of other issues. So if we can get COVID under control, get a vaccine rolled out, I do believe early to mid next year, you're going to see a lot of people that have held off selling a property and waiting to kind of, the coast is clear. I think you're going to see a lot of people say, okay, now it's time to move on. And really the real estate market and any market for that matter, whether it be real estate or bonds or commodities or whatever it might be, any sort of market is really about consumer confidence. And obviously consumers have had a reason to lack confidence, have no confidence in the economy. People are worried about their jobs and the overall economy and how we're going to get through this whole pandemic and so on. Again, as that subsides, as jobs come back online, as the economy starts to recover, people gain confidence. People say, okay, now I was thinking about moving, now I'm ready to move forward. So the question then becomes, should you sell now? Should you wait? Should you buy now? Should you wait? That's more of a personal decision. It's tough. I don't like to make blanket statements because everybody's situation is different. If you'd like to give us a call, again, I'll ping up our website. If you'd like to give us a call, we can walk you through maybe your particular situation and give you a little bit of guidance as far as, is it time to buy or sell? But obviously, it's a great time to sell if you're down in this low-end price range here. If it's a situation where you need to sell, you're ready to move on, maybe you're moving to a different area, whatever it might be, it's an excellent time to sell only because there's very little inventory. You got low interest rates, high demand, extremely low inventory. Now, obviously, if you're in a higher end price range, it's not nearly as good in terms of a hot market. Still very good though. Historically, the upper end market's every bit as good as it's been in the past. But as you can see from some of these stats and numbers, there's very, very little inventory and it's driving demand. So in any event, as I mentioned, if you'd like more information about assist to sell, maybe you're thinking about selling your home and you're ready to just get started. You're like, this market is good. I want to sell my home. You can go right to our website at forrenohomes.com, click on the sell now button, fill out give us some basic details about your property. We can get started. We can get your home listed and online in a matter of no time, walk you through the process. And best of all, we can save you a whole bunch of money in the process, and we can sell your home for only $39.95. Of course, if your home's over $400,000, it's only 1%. So significantly less than you might expect to pay and save you a bunch of money. So thank you for joining us today on this live real estate market update. We look forward to talking to you soon. Stay safe, and we'll talk to all of you real soon. Thanks again. Bye-bye.
Assist to sell way smarter.